Hey, welcome to the InvestHard. So my portfolio went from 294 to 285, so pretty bad week. So last week I talked about all the covered calls that I have, and now I'm going to talk about the puts that I have. What is a put option? So let's see with an example. So here, IDEX cost $1.40 per share. What if you want to sell a contract that says if the price dropped to $1 or less, I have to buy 100 of those at $1. So like even if the price at this date falls to 50 cents, I still have to buy 100 share of IDEX at $1. So this is this contract. But if I sell this contract, I can get $32. And if by that date IDEX is above $1, then the contract just expires worthless. So you just collected the $32 and that's the end of it. So now that we've barely covered the covered calls and puts, I'll show you the strategy I'm trying to do with IDEX. So as you can see, I bought a bunch. That was a bad idea, but whatever. And then I sold a lot of covered calls, pretty much as I could. So I sold 28 contracts here. And with the money I collected, I think it was on average 41 cents. So I collected $1,000 here, more or less, and then I used that money to sell puts. And I think I sold 11 or 12. And as you can see with the max loss, it's still below the amount of premium I collected from the covered calls. So how does it look like? Let's try to do the break-even chart. Let's select this. That's the covered calls. Now let's select the put. Okay, let's edit the ratio. So I sold 28 covered calls. I sold 12 put. So those premium are a little bit changed, but you get the idea. Okay. So what is happening? If the price stay between 1.5 and $4, then I pretty much, like all of those contracts expire worthless, so I collected 2,000. So it's about 2,000 in a year. It's technically not so bad, especially with the amount of the total amount of money invested in the IDEX. And if it actually goes down, I'm actually going to use the premium money I got from the covered calls to average down the overall position. And if the price goes way up, then my goal is going to pretty much roll the covered calls, and those puts are going to expire worthless. So I still think it could be like a decent strategy. So this is my delta. It's at 38.27. I have made the mistake of selling a bunch of covered calls with a strike of 39. So as you can see, it's dangerously close to being in the money. So what I'm going to do is I'm going to buy them back and sell them for a higher amount next week. So let's do it. Let's buy them back at 85 and try to sell them with a higher strike, which is 40, and for more money. Here we go. We have 16 and let's try to be a little bit greedy. Actually even more. And let's double check. We sell at 40, we buy at 39, and yep, here we go. Yeah, as I expected, it's not filling. Let's try again with the lower amount. Yeah, let's try 70. Here we go. Still not being filled. Let's try 15. It's still not being filled. Let's try 14. Here we go. It has been filled. So what does that mean? It means that now, instead of having my delta with a strike of 39 at the end of the week, it has to be 40 for next week. So let's hope that doesn't go this much this quick. So today NCLH seems to be going up a little bit, but sadly I do have a bunch of puts that end next week, in 2 weeks. As we can see here, I have one at 25 and two at 27.5, and I don't want to be a sign, so what I'm going to do is I'm going to hold them into the future. So here we go. Let's start with the 27.5. Here we go, and now we want to sell them in the future. So how about February 18? Because we know the EPS is right after that. Here we go. Sell. And yeah, let's try this. So we have two. Okay. So doing that, we just set the new date later in the future. And in exchange for that, we collect hopefully 94 in premium. And they're not being filled. Let's lower a little bit the premium. Here we go. So still buy to close for in 2 weeks, sell to open in February. Here we go. Alright, let's lower it yet again. Here we go. So we collected $92 just for set or two put for later in the future. We still owe the same amount of money, but at least we collected $92. Now let's do the same with the $25 put. Here we go. Let's select it. So we need to buy to close. And now, wait, which one was it? 25, I believe. Yes, 25. Good. February, sell, put 25. Here we go. Okay. So we buy to close 25. We sell to open 25, but in February we try to collect 85 bucks. It's not filling. Let's lower the amount of premium. Let's lower it again. Damn. I don't get it. You should feel NCLH is at 1970. There we go. So yeah, we just pushed a little bit of our put, we rolled them, and we collected a bunch of money. Hopefully by then NCLH is going to be high enough that they'll either end up worthless, or maybe we will be able to hold them for a lower amount. Alright, so last Friday all of my NCLH covered calls expired, so now it's time, I guess, to renew them. So today NCLH is at 20, which is a nice bump, even though it went down quite a bit that past month. Okay, so I can sell, I believe 15. Yes, I can sell 15 covered calls. So now let's try to see when is the next EPS date, and I'm going to try to sell them for just before that. So it's expected on February 24. Okay, so let's go to before February 24. So this one. So which one? I think I'm gonna go a little bit greedy and go at 27.5 strike. Here we go. Let's sell 15. Here we go. So hopefully NCLH doesn't go above 27.5 on February. That's it for this week. Follow this channel if you actually want to know some proper investing. This guy is mostly talking about value investing and it's pretty interesting. Check out in the description to see my IRS account. And that's it. Bye.